here I am. So let's say a word of prayer in the belief of the power mighty. We pray that the markets are going to be good to us. We pray that those who are going to be following us today may be successful. We pray this in the belief of the power mighty. Amen. Guys, we are live. So let me just share my screen. The first 2 minutes candle is already printed. So I'm going to show you exactly where it is. Let's see, where are we? There we are. Here I am, down here. There we go. This is the daily candle. I was just mapping up the day. Let's go to 2 minutes. And you guys can see the 2 minute candle is right there. This is it. It's looking funky. There you go. It's going down. I'm going to stay out of that for now. You can see it has a very long wick. Okay, let's go. We are at 59.16, so let's write that down. Our goal is to get it to 108, 59.16. That's our starting point. You're going to write that down. And it's 9:31, so that means 1 minute is gone. Okay, so that bar is forming. This is an ideal situation right there. Let's go to trade, web terminal. Let's look at the bar. Wow, it's a massive bar. We're not going to stay it out. We're going to jump in right now. Boom, 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 boom. There we go. I can't wait to jump in. There we go. We're going to sell that. We're going to sell it. We sold it. Our stop loss is going to be right here at the top. This is our stop loss right there. 25,077. Oh, no, this is gold. Fuck. Oh, sorry, man. Just excuse my French. Rookie mistake. Okay, so we're going to sell that. Boom. Boom, boom. We sold it. Stop loss is right here. 25,077. 25,077. That's our stop loss. Okay. Boom. Okay. I'm going to look at gold now so I can also, gold is XA. This one right here. This is gold. Okay, that's the first candle. Stop loss is right here. 47.95. 47.95. 47.95. Because now we have two trades going. We have gold. We have both of them going on. Okay, so we have both of them going on. Here's gold. You can see it's going down. It is there, the first candle. That's gold. Let me open another chart here. So we have another chart for so we have two charts. We're going to have another chart for NASDAQ. There we go. So here's NASDAQ. All right, I don't know. It's acting like that today. Okay, so NASDAQ looks like that right now. We entered here is our stop loss. Let's look at our web terminal. Web terminal. Okay. So this is NASDAQ right here. This is a 5 minute. Again, you remember we're going to play that game of, this is our stop loss. You can see the stop loss is up here. Entry point is, we are above our entry point. So right now we are negative. We are using our free flow color change strategy. What you don't know is you don't know. Okay. What you don't know, guys. But if you watched our live yesterday, you definitely know what we're talking about. Okay, so this is a big candle. So if we go further down, I'm going to I'm going to cut it into size, bring this down. Okay. I'm going to bring it down further. So now we are in the red. You can see it's pumping up now. So the first candle is done. The first 5 minute candle. On the FBS, I have 5 minutes. I have 1 minute, 5 minutes. I don't have the 2 minute bars. So I'm I only have the 5 minutes. So you can see I'm banking on this here to go down. If it goes down, I'm going to trail my stop loss. You guys know what I do with my stop loss. I'm going to send my stop loss down. Our margin is very tiny because it's a very small account. We could be margin called. That's why I really don't want to risk more than I can afford here. Yes, so I'm going to trail this down. I'm paying attention to the margin. You can see gold is now moving up. It could be just, yeah, this is exactly what happened here yesterday. You can see, not yesterday, this was earlier today. You can see what happened here. You can see this was exactly what happened. It pumps down and then it comes back. It gets closer. But this was an ideal position here. So let's see how far this can go down. Similarly, if you look at NASDAQ, it's now pushing up. It's pushing up now. The NASDAQ is pushing up also. You can see it's staggered up here. We had this massive red going down, and then now we're moving up. Okay, so it's 9:36. So we are 6 minutes into opening the trade. 6 minutes, guys. Okay, so can you guys hear me? Sometimes I get muted. I hope you guys can hear me. Yeah, I should. Yes, I think they're saying yes. Can you guys hear me? It says we are live, so we should be. You guys can hear me, right? YouTube is currently experiencing some issues with their APIs. So if you can hear me, I guess it's API issues with YouTube, something that I can't help. Okay, so this is where we are right now. You can see the way it looks is where we are right now. Okay, so it looks like it's going down now. If it pushes further down, but it looks like it's just coming down to collect this. Okay, it's coming down to collect these. It's coming down to collect this. Yes, it did collect these stop losses here. So that's basically what it was coming to do, sweep this liquidity here to prepare for a flight going up. Okay, so here we are. Okay, I'm going to bring my stop loss down. I'm going to bring my stop loss down to this candle. There we go. I've brought down my stop loss. I'm going to do the same with gold. I'm going to bring my stop loss down. There we go. Okay, just to minimize the damage to that account. So I've moved my stop loss to the candle down. Okay, we're looking at gold. We are looking at NASDAQ. So we are up a little bit here. Let's see. I'm hoping that it will come all the way here to collect this liquidity that's sitting down here. You see these stop losses that are here? I think the market is going to try to go there. And once it gets to that point, we're going to get out, okay? Or we just move our stop loss, no problem. Okay. All right, so let's go, baby. Let's go, let's go, let's go. Let's go. It's a big bar. So I'm going to wait. This should be closing soon. In 1 minute or less, it should be closing soon. No, man, there's not enough momentum to push it further. Our goal is, I'm thinking it should go further, you know, like further down to try and collect this, but maybe not much liquidity here. But I think it's going for it. It is coming for this liquidity here, this liquidity here. You see this liquidity here? I think it's coming for that. It's what we call liquidity sweeps. So sometimes it's good to see what happened previously. So you can see there's a lot of stop losses here. There's folks who entered the trade going up here. They have their stop losses right here. So I think this is coming down to collect that, okay? All right, so let's see. I'm gonna move my stop loss to break even. Okay, so I've moved my stop loss to break even on the gold. Let's see on Nasdaq. I'm also gonna do the same, slightly one ticker below. There you go. I've moved my stop loss to break even now. To preserve the account. It's a very tiny account, so I'm doing what we call trailing stops, okay? So I'm using trailing stops. So literally, okay, now I'm gonna move the stop loss to the top of that candle. Maybe not, maybe too early. Yes, I'll move it there. Let's see, where is gold? I'm gonna move my stop loss to the top of that candle. Maybe not, maybe still too early. Yep, maybe too early. Give it a breathing time. Let's see how much time we have. This candle has about 4 minutes to print. These are 5-minute bars here on FBS. So the broker we are using for my student is FBS. Excuse me, some of you are asking what brokers to use. You can use FBS. I have no connection with them. Okay, we're gonna hit our stop loss. I think it's gonna take our stop loss here. Stop loss is just about there. They're coming back. We're gonna hit our stop loss on gold. Boom, boom, out, boom, boom, maybe. We gave up all the gains. That's how the market moves, up and down, all day long. Ooh, we survived with a bare skin. Literally. Oh my goodness, that was so close, guys. Yep, it had me like, okay, so we're gonna be stopped out. Then we have to figure out our next move. That would be our first trade. We only do 2 trades. If we win both, we get out. If we win the first one, lose the second one, we can take a third trade. We're here between 9:30 and 11 every single day this week. Yesterday, we had a live session. If you didn't see the live session, we literally doubled the small account from 29. If you guys remember, it was around 29 to 59.16. So our goal today is to get it from 59 to 108. Because once we get to 108, something is going to happen. Don't tell them. Something magical. We're going to go into what we call aggressive recovery strategy and aggressive recovery mode. Because our goal is, can I recover 1600? That is the playlist that you want to be looking for. The playlist is, can I recover 1600? I still believe they're going to come for this liquidity here. They're probably trying to, but there's a lot of resistance. There's 2 more minutes to go on this 5-minute bar here. 2 more minutes to go. So far, this is gold. Yep, we're still waiting to see. Okay. My goodness. Okay, now it's going to take us out. Okay, gold, we are out. Officially, we are out on gold. We are officially out on gold. Let's look at NASDAQ, US 100. That's US 100. This is where we are. Again, I think that one also is coming back. Let's go to actually the actual trading view. This is how NASDAQ looks like, guys. This was a really ideal situation here. It started, the 200 was almost flat. The 20 was slightly above, but they're pretty close to each other. And we had this boom going down. What I don't like is the wick, because the wick does show there's a bit of shoving, pushing and shoving, okay? So wanted to go up. The price wanted to go up, and then the sellers woke up and pushed it further down. That's why we ended up with a tall wick. at the top there. All right. I think this will take us out of this trade. Okay, so we have printed another bar. If that bar turns out to be red, we are going to push further down. We're going to push further down. That bar is, there's a fight there. There's a big tussle. There's a big fight to go up. There's a big fight to go up. Okay, looks like it's gaining momentum to the upside. I was starting to see here, what are they looking for here? Do you think there's any liquidity sweeps? Is there any money here? Let's look. Oh, it just printed a big bar going up. Oh my goodness. Okay, that took us out of the trade. Yep, that's going to take us out of the trade. Boom, we are out. And if we go back, okay, so we did gain a bit. We are at 62.89, guys. You remember we started at 59.16. So our first trade, we are at 62.89. That's our first trade. So we're going to look for a second trade. So we're going to look for a second trade, guys. We're going to let this go. It's a big bar to the upside. Okay, so it's coming. You remember the theory with the free flow color change strategy? What happens? The market, the bars tend to get closer to the 20, and the 20 tends to move closer to the 200. So sometimes the market operates far away from the 20. When it gets far away from the 20, like it did right here, the tendency is to come back close to the 20. Now, once it gets closer to the 20, sometimes it can slightly break through the 20 and move up towards the 200, or it may have what we call the 20 halt, 20 SMA. We are using simple moving average halt. So the 20 can halt this entire move, okay? And some of you are asking, what is this that you marked today? What I marked today is I marked the highs of the day, opening, the London session and the Asian session. This was the highest point right here. This one here was the highest point. That was the highest point today, that one. So today's market, the US market also is probably going to fall within that same range, okay? So I don't see it going further than that, okay? So right now we are seeing, okay, so that's coming down. If it engulfs this, if this bar emerges beyond this, if it emerges beyond this green bar, then I know we're going down, okay? Looking at gold, let's see, where's gold? Okay, gold is again behaving the same. So let's see, it might be halted by the 20, or it may pull through to get closer to the 200, okay? So all the bars are below the 200. So we are likely to be looking for, the reds are going to be much stronger. The downward moves are going to be much stronger when you have the 200 looking like that. And you can see from these bars here that this could be a pullback, okay, towards the 200, and eventually we're going to have another pull down. So here we could get a halt right here on this one here. So our goal today was to take this account to a much higher number than this, okay? However, you can plan, but the market is going to give you whatever the market wants to give you, okay? The market decides. The market always decides. The market decides what it's going to give you. You may wish, you may pray, you may want, your wishes are not respected by the market. The market doesn't really respect your wishes. And in that case, you take what the market gives you, okay? So as a trader, we don't want to take too many trades. That's called over trading. And over trading is what burns fingers. So it's time to bite an apple. Guys, I always do this. Every time I'm trading, I have an apple. I bite the apple with the skin, I clean it, and then I bite it. This is organic apple. They taste much better for me than any other apples. I've tried so many of them, but I like these ones. There we go. So we're going to sell, that's the US 100. We're going to sell it. And I'm going to put the stop loss right here above this, maybe halfway here. This is a big candle, 24,951. Sorry. 24,951. We have our stop loss there, very close to our entry point. We can move it a little bit to give room to the candle to print. If it extends further, we are going to move our stop loss down close to break even, because right now we're going to be negative the way it is right now. Let me look at, okay, it's already printing. Now we always see a follow through, but that may not be the case here, because you can see it's forming, they're called haramis, a small green candle here. Forming a green candle on the side. The first trade is always your best trade. These other trades, the risk goes on increasing. So we just took the first trade. This would be our second trade. And if we win this, we call it a day. If we lose this, we may take another trade just to recover our loss, okay? Because they're going to be riskier trades as you go along. With a lot of pushing and shoving. If you go here, these bars are 2-minute bars. If we put a 5-minute bar, then you're going to see exactly what's happening, what we are seeing there. So you can see the 5-minute bar. It's being halted by the 200, okay? So you can see the 200 looks like this. It's pointing up, and we're trying to counter trade the 200. So there's a 200 halt here. And I think there's going to be an explosive move to go up. This is a 5-minute bars, okay? So the 5-minute bar is above the 200. If you go to the 2 minutes, so you can see there's divergency. The 2 minutes looks like this. They are below 200. They are all below the 200 if you're looking at the 2-minute bars. If we go to the 15 minutes, again, they're above the 200, okay? However, you can see it is printing a red candle here because the 20 is dipping facing down. My belief is it's trying to come closer to the 200 because it's separated. You can see the way it is separated. And you can see they're not going to be able to go above this because this is what the highest that was printed during London session, Asian session. These were the limits for London session and Asian session, the whole for today. We are now trading the New York session. So that's literally the limit. So this is like a ceiling for us today. Yeah, I don't think it's going to break above this. I could be wrong, but if it breaks above this, then it's a time to jump in for a long trade. That's basically what it tells you, that it's hellbound to go up higher and higher. Something could be some good news, whatever is happening in the market. But you see, we are in this range here. If you look at this little box here, you see this box here? Let me draw the box. You see that part there? Let me just show you what I mean. This, you see that? That is strong. That tells you something. That is strong. Just prior to opening, look at that. You see that? Accumulation of all this energy, and then you're going to get an explosive move here. However, it is a counter trade. So let's see. I think we are printing. We are going opposite now. We are going back. Yeah, I think it is more of a Hail Mary here. They're playing a Hail Mary. The buyers and the sellers are playing a Hail Mary. What time is it now? 9:56 a.m., guys. We are not even 1 hour yet. We are not even 30 minutes into the trade yet, into the session yet. It's 9:56. We started at 9:30, and we are already seeing the market behaving so funny, okay? Yeah, I can see Hail Marys. Let's see what the hour is going to bring. The top of the hour, 10 o'clock. Let's see what that's going to bring to us. Not much liquidity at the bottom there. This is US 100 or the NASDAQ 100. Come on, we just want you to turn red and go down. That's all we want. That's all we want this candle to do. Do us a favor. It's just become red and go down. That's all. Just boom, down, like that. Like that, baby. That's all we want. We just want you to go down. It's 9:58. Man, there's 2 minutes before this candle closes, and it has refused. It has refused to go down. It's printing. Okay, maybe it's changing its mind. It's listening to my prayers. Okay, let's go down. Let's go down. Okay, 2 minutes to go. Oh, no, it's flipped again. Oh, no, man. This is almost like a doji. The buyers and sellers, indecision. Now it decided to go up. It is going to end up as a green candle, a green bar. Let's see. Let's look at it here. If we go back to 5 minutes. Yeah, you see, it is a green bar officially. We have 24 seconds left. Yeah, it's officially a green bar. 34, 35, 20 seconds. So it is officially a green bar. Why sitting on a 200? And the 20 is up here. Okay, something happened. Okay, it just jumped. So I think this is the transition point now, going up now. So now it's gonna go up. It's a transition point. We're going to move our stop loss down so we don't give up our winnings. I'm going to move my stop loss right to that open candle there, to the open of that candle, to break even. Yep, I'm going to move my stop loss to break even. Okay, so we can only lose on the fees. Yep, I'm not giving it any breathing space because I think it's changing direction. I am not giving it any breathing space, guys. I'm ready to get out of this at break even at zero net. Let's see. Okay, we are still at we were at 62.89. We're at 62.54. So we have given up some cents there. You can see what is going on here. A lot of indecision, accumulation. I guess it's going to start something like this. You see this part here? This is called accumulation. Consolidation. Okay, I think we're out now. Yep. If you look. Yep, it's almost. The hour did not bring anything. It's 10:01 now. The hour did not bring any changes. The top of the hour, no big guys came in. No big guys selling their positions. Nope, everybody is right there waiting for a breakout. Okay, now it's coming up. I think it's going to take us out now on the upside. And that would be our second trade of the day. And we're going to call it a day if we don't lose. If we lose, then we're going to have to take another trade. But I have already secured this by moving our stop loss to break even. It's a trailing stop loss, so I just moved it down. That's why we call it free flow. You know, you do whatever you want. You do what the market tells you. The color changes, you get in. The color changes, you get out. You see a big power candle, you get in. You take advantage of the move. The color changes, you get out. The moves are powerful when they start close to the 20, when they start close to the 20 or close to the 200. And you always know that when the 20 is far away from the 200 and the bars are far away from the 20, they tend to move closer to the 20, and the 20 tends to move closer to the 200. Very simple, right? We keep it simple here. It's a very simple strategy. 16-year-olds can do this, maybe, if with practice. Grandmothers, 99-year-old can do this with practice. Simple practice. It's not complicated. We don't have a lot of this indicator, that bell, that whistle over there, that mechanical something, that structure, that triangle, that rectangle, that candle, million candle patterns. No, we're not looking for any million candle pattern. It's good to know some things like the size of the bar, that you can actually look with your eyes, open your eyes, you can see this bar is big. So if you entered at the top here or somewhere here and you write it all the way down, you would be in the money. Now, sometimes there's follow through. You can see when these bars are huge, there's always a follow through, that something follows through. But it's not the case here. I think now they're going to take us out. It seems the buyers have decided. Here is a doji, indecision or change of direction, change of trend. So I think now it is wanting to go up. There you go. I think it's wanting to go up now because the 200 is halting the whole move. The entire move here is being halted by this 200. Very powerful. We can see it is trying to go up now. The 20 has stopped dipping down. It was dipping very, okay, it has just pushed forward. So I think we are going up now slowly. And I think we should be prepared for an explosive move to the upside. So let's see here. Yes, we're getting close to our stop loss. Our stop loss is getting really, really close here. For comfort, we are at break even, so don't worry. We are at break even. If this closes as a red bar, I am going to move my stop loss down to that bar that is forming right now. There's a red bar forming. I could move my stop loss right there, but I am seeing it's being halted by the 20. I mean the 200. The red bar, the red indicator here is the 20 moving average, SMA, simple moving average. You can see it's right here. This is the 20. This is the 20 right here. You can see length 20. Its style is the red one. Okay, that one. Yep, that one. And we put the second one, make it thicker. Okay, there we go. It pushed further down. That's good. So I'm going to move my stop loss to the top of that bar. There we go. We are trailing our stop loss. So now we're going to save a few cents. Okay, so now we should be saving a few cents. 62.54. We were at 62.89 after the first trade. So now we're at 65.90, but we haven't closed the trade yet. Okay, so little by little, Rome was not built in one day. Oh, okay, it's coming back to, get us out. Oh my goodness. What a week at the bottom. Come on, where are the sellers? Oh man, it's coming for a stop loss. Maybe we put it too tight. It's a 5-minute bar. It's 10:07. So we still have about 3 minutes to go with that bar. 3 minutes to go before the bar closes. It's a 5-minute bar, guys. Now, some of you are asking, what are we trading? We're trading NASDAQ, okay, on Forex platform. The Forex platform my student uses is FBS. I have access to his account. It's a training account, guys. So we show the ugly, the bad, and the good, okay? So if you've watched our previous lives, you see the crazy stuff we do on this account, okay? We are waiting to get this account to 108, and then we're gonna go ballistic. Literally, we're gonna go so aggressively that you guys won't believe it. We could either break it or make it. We're gonna blow the account in one soup if the market turns against us, okay? That's how bad we're gonna go. That's how aggressive we're gonna go, okay? So you don't wanna miss that. It's coming soon. All we need to do is get this account to 108. Okay, we're gonna be taken out of the market officially now. Stop loss hit. Bam! I think so. It's gonna hit our stop loss. Yeah, it is pretty. Oh no, something happened. Oh, what happened here? Oh. Okay, we're gonna secure part of that. Yep, we're gonna secure the part of that. I told you there might be an explosive move. We're gonna secure some of that. Now we're gonna get out. Stopped. Okay, we were stopped because we secured some of that move. So now we are at 67.83, guys. Okay, so we started at 59.16. The first trade took us to 62.89, and now we are at 67.83. So that's official wins, 2 wins. Okay, 2 trades, 2 wins. Okay, 2 W's. Okay, now I know some of you are like, what is that? That's nothing. Now you're forgetting that my student lives in the village, okay, under $1 per day, literally. The max he probably made in any one day is $3. Now some of you are asking, there's no place like that on earth. Man, I come from there, okay? I grew up there. I lived there in the village. I still dwell from there. When I say dwelling, I mean I am always there. My heart, my soul, I know what goes on in that village. And now I'm trying to show somebody from the village that they can actually do this. Now, there's a long story. If you don't know the story, you can go watch some of our lives, okay, the previous lives on this channel. Go and watch Can I Recover 1600? That is the playlist. Or you can watch the Forex trading training playlist. Okay, we're giving you free training here. And we're using a very simple strategy. We haven't gone into more other strategies really that much, because this simple strategy actually is growing the account. This account was $8. This is the fourth session. You guys remember that? Okay, this is session number 4. Session 1 was $8 to $22, then 22 to 26, 26 to 29, 29 to 59, 59 to 67. Now we are at 67, okay? Our goal today was to get it to 108, but the market sometimes doesn't give you what you plan, okay? You have a plan yet? Yeah, you do have a plan. We know where we're looking at. We're looking at 108, but the market does not give us what we want. So you can see here, it came, licked us out, and it is still pumping downwards, okay? It's still going down, but you can see there's a lot of long wicks from the top. So I'm thinking the move will probably be an explosive move going up. That's what I'm waiting for. It's probably creating something like this. You see this channel here? You see, this is the plan. I think it's creating something like that. It's going to create something like that here, around here, so that the 20 can come closer to the 200. And then, boom, explosion, like here. You see what happened here? Do you guys see that explosion? That explosion? Just imagine if you had entered the trade here, and boom, 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 all the way up to here. Millions made, okay? Some of our members in the Smart Move Club captured that move, okay? Yesterday, they captured that move and millions were made, okay? Some folks are trading massive accounts, okay? Not $20. Some people are trading millions in their accounts, hundreds of thousands in their accounts. And then yesterday, I showed you something. I showed you about prop funding, you know, where prop firms fund some of our traders. So some of our traders control massive accounts, okay? They have 5, 6, 7 accounts with some of the prop firms, major prop firms. They're trading $1 million accounts, $3 million accounts. So a move like this will net you almost 6 figures, 7 figures for some of them, okay? A move like this. If you capture a move like this with proper risk management, following the right strategy, and you're just following a simple strategy like this one, the FFCC. Now, somebody is asking, what is the FFCC? I can show you guys. Let me go here. If you allow me to show you, I can show you guys. Let me just go back. I'm going to bring in a new blank document here. So the FFCC, and if we make this bigger, let me see if we can make these numbers, these letters bigger so you guys can see them. There you go. So the first F stands for free. Free. The second F stands for flow. The C stands for color. Excuse me. And then the next C stands for color change. And it's a strategy. So this is our morning trading strategy. We enter the market, we enter the trades as soon as, so that's what we call the FFCC strategy. Now, it's not our creation. We didn't create this. This has been used for many, many years. A lot of our traders have been trading for 40, some of them 30 years, 40 years. A lot of our coaches. We have Tajimoto on here from Tokyo, Japan. These guys have been online for many years. Some of us have been online since 1998, okay? So that gives us almost, 28 years for some of us doing this stuff. But some of our coaches have been here trading for 30, 40 years. Mr. Baker is on here from Atlanta, Georgia. Anything online, these guys have been doing it. They've been trading the digital marketing. Now they're into AI. Now they're trading never stops. They trade they learn every day, do this every day. Okay. So basically with the free flow, color change means you have two indicators on the chart, and the two indicators are what I'm showing you here. Okay. Very simple indicators. We have our 20 moving average, which is the blue one. Okay. So to get the indicators, if you have the TradingView platform, if you don't have TradingView, I'm going to put the link in the description. Use that link. It's my affiliate link for the Smart Wolf Club. Whatever token we get from TradingView, if you sign up, subscribe, it's about a cup of coffee to get the professional subscription, cup of coffee per month. If you subscribe, they give us, I think, $10, $15. That goes to help the club members, okay? The Smart Wolf Club members depend on that for comfort and for their entertainment, for their joy, so that we can continuously bring you this type of knowledge for free, okay? You're not paying anything right now. If you're going to watch this on YouTube, maybe I don't know if you're paying YouTube, but you're not paying us anything, okay? It's free. We're giving this for free. It's just giving back to the community, things that we've been doing for so many years, okay? It's not professional advice. Let me put a disclaimer here. What I'm showing you here is not some get-rich-quick scheme. You have to learn the strategies, the skill. And remember, the markets are very risky. You can lose your entire investment. So you only do this with money you can afford to lose. If you can't afford to lose it, don't. My student can afford to lose this entire account. He has lost accounts before, so this is nothing. He can actually afford to lose this account without any squams or anybody running after him. That was the agreement. We're going to take this account to we're going to do the ugly, the bad, and the evil on this account. Okay. So the account is at 67.83. We fell short. Our goal was to get it to 108. It's still 10.17. We can see if there's another move that we can. Sometimes gold actually pumps after 10 o'clock. Let's see what's going on the gold side. Gold side, nothing much really. You can see nothing much happening here on the gold side. This is a 2-minute bars. Okay, so there's a pump up here and then boom, comes down. So I think it's going to do the same and then it's going to go down again. Okay, because it's printing those lower highs, lower highs, you can see. So it's going to try to pump downwards. That's exactly what's happening. Okay. There we go. Bye. Have a nice day. All right, so this one is pumping up, pumping down, pumping up. So we're looking at that. Okay, what else can we look at? Okay, some of you are like, oh, do you guys trade stocks? Yeah, we do. So some of our members are trading stocks. So let's say NVIDIA. How did NVIDIA do today? Look at that. It gapped so high and then boom, crashed. Look at the gap. Look at the gap, guys. Look at that massive gap. Oh my God. From 178 to literally at some point at 185. And then it came down. Okay. So now it has slowed down. Okay. Look at the moving averages. 20 is dipping down. 200 is facing up, likely to be going up. Okay. Conclusion, it's likely to be going up. I can remove that line. Don't like any lines. Keep it simple over here. So those who entered this engulfer here, as soon as it engulfed that, you enter that trade, stop loss at the top, and you ride that all the way down here. So that's how they made their money, using the free flow color change strategy today. If we look at Tesla, these are pretty volatile stocks. That's why I'm talking about them. They have massive volume. Okay, again, a gap up, boom, to the top, upside, massive candle to the top. So if you caught some of that, you'd be in the money. And then shortly after, it starts working down here. Okay. So then again, capture that move down, boom, 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 all the way down. Okay. Capture the move down. Okay. So you're trading options. You could be buying some puts. You could be selling. All right, here we go. So this is where the US 100 is at the moment. Look at what it's saying. It looks like nothing much now. Okay, so let's see on the upside if there's any move to the upside. Any move to the upside. We go to the 2 minutes. Okay, so that's where we are. It has come back to the 20. As I told you, sometimes it goes away. The bars close far away from the 20. The tendency is to come back to the 20 and then continue downwards. And the 20 also does the same. It goes away from far away, wider from the 200, and then it comes back to the 200. The 200 is like the parent. The 200 is the parent. The 20 is the child. And the market is the stepchild for the 200. They tend to move together. And when they move together, powerful things happen like this. Okay? When they're close to each other, powerful breakouts happen. You get power bars on the opposite directions, and these can make you money. Okay? These power bars. If you learn how to get in and secure your stop loss at the top, if it's going down, if it is going up, stop loss at the bottom. So you're only risking about 1 bar every single time you take a trade. That's how you minimize your losses. Okay. If a bar is so big, you can split that bar into thirds. So you have the first third, the second, and the third. So I could have my stop loss somewhere in between there on the first third or the 2/3. And that minimizes my loss because I don't want to lose a whole big bar like this. Okay. I think you guys saw that. And that's what we call trailing stop loss. Okay. So I'll trail my stop loss, move it accordingly. Okay. Look at the market to secure some of the wins. Okay. You don't want to give up your wins, but there's also the danger of putting your stop loss too close, that a minor retracement or a minor rebound takes you out, leaks you out. A week, minor week up or down, weeks takes you out, and then you're gonna miss the entire move. Okay, an entire massive move to your. So sometimes you feel that way, but that's part of trading. You have to be able to control those emotions, and that's what makes the difference between experienced or professional traders and wannabe traders. Because wannabes, once they get something like that, they are frustrated, they are disappointed, they are disgusted. Then they throw reason out of the window and they start revenge trading, or they risk more than they should. They forget about their strategy. They forget about their goal. Our goal is to get to 108. Now, that was our plan today, was to double the account, but you can see we couldn't because of what the market has given us. Okay, so we took what the market gave us and we are happy. Okay, so the market gave us a little bit. Okay, so from 59.16 to 67.83. If I can bring a calculator, I know you guys, in terms of dollars, that's nothing for some of you, but imagine for somebody who lives under $1 per day, that's a lot. That's like a week wager, a whole week of hard labor wager. So 67.83 minus 59.16. 0.16 to be exact. So we made about $8 in 2 trades, okay? Now $8 divided by 59.16 in terms of percentage growth, multiplied by 100, this is how much we have grown the account today, by 14.65%. Now, you guys can go around, do your Google search, do everything. Tell me which assets out there are growing by 14% every day. None, okay? None. Zero, okay? So this should tickle your imagination. So imagine if this account was 10 times the way it is right now, and let's say everything remains constant. So just multiply the gains by 10. So the $8 that we made today, multiply that by 10, okay? Was it the $8? How much was it to be exact? Let's say 67.83 minus 59.16. That's where the starting point. So $8.67, okay? So let's say this account was 10 times the size it is right now, and I could use 10 times the lot size and again gain the same moves. We'll be talking about times 10, $80, $86, okay? Let's say it was 100 times. Let's say the account was, see, this account was 59, so that's $500. If it was $500, let's say you made $86. Let's say it was $5,000. Because some of our students, coaches who are here, who took the trade while I entered, when I say enter, they entered, they took the trade, got out at the same time. Some of them are trading hundreds of thousands in their accounts. So multiply. So let's say somebody had 10 times what we had. They're talking about $86, okay? Let's say they used 10 times this 100 times what we had, okay? So you're talking about 867. Now, you start talking now, right? Start making sense, okay? You had a $5,916 account and you make 867. Boom, just like that, in less than half an hour. It was less than half an hour, okay? Market opened at 9:30. We were done by 10:50 or less than 10:50. We were already done, okay? Less than half an hour, 20 minutes to be exact. Done, out. Go to the beach, you made your 867. Now imagine for those who have even bigger accounts, you're talking about those who are trading like 6 figures, 5 figures, not even 6 figures, 5 figures, a $50,000 account. You're talking about making $8,000 in one trade. I mean, in one session, okay? $8,000, that is a wager for some people, even some well-developed countries. 8,000 in one session trading will make a big difference to a lot of people, okay? So I just want your imaginations to look at this. And nothing is going to change. If you have an $8,000 account or an $800,000 account, the strategy is still the same. Just the way we took it, we entered, you just multiply your lot sizes by whatever X factor your account was. So my account was only 59. You can see the lot size I use. If yours is 10 times that, you multiply the lot size by 10 and you just trade that way. It's risky, okay, but we are going aggressive. We are bordering aggressiveness. For a small account like this, we have to be aggressive, okay? Because this is a training account and my student has no problem losing this account. So we can go as aggressive as we like, as it gets. And that's why I want you guys to be treated to this. So you can see how aggression can be. We have been aggressive and we lost the account. You saw that in the beginning, from 1,600 to like $8. That's why we're trying to recover the 1,600. So we're gonna go, we need to get to 108 and then we're gonna go with a plan that is aggressive recovery strategy. So I don't want to spend a lot of time today. You can hear my voice. I got a little tickle I'm under the weather, so I don't want to talk too much. I've eaten my apples. Let's see if we have more left. Not much left. Just a little bit. Bite this apple. It's pretty nice. That's what I do when I'm trading. Bite on apples. They tell me 1 apple per day keeps the doctor away. So I just bite apples when I'm sitting down trading. Sometimes we trade between 9:30 up to 11. Sometimes we leave the market sooner. Once you hit your goal, you get out and go, you know. Our goal, we have many goals. Our goal was to get to 108, but again, we also have the number of trades that we want to take. We don't want to take too many trades. Max number of trades is 3, guys. I've already told you many times. Don't take more than 3 trades per session. Some of you are going to argue with me. They say you trade the whole day. Yes, you can. We can sit here and trade the whole day. But at the end of the day, that's not the type of lifestyle we want. We want to train you correctly. You want to come in, first 20 minutes, first 1 hour, first 1.5 hours between 9:30 and 11, you're out of the market. So you can have the rest of the day to do what you like most. We don't want this to become another 9 to 5 or rat race, because all we are looking forward is to all of us getting out of this rat races. That is our philosophy in the Smart Wolf Club. That's why we started this anyway, the trading. Why did we start trading? Why did we start looking for opportunities online to make money? Because we want some freedom, right? We don't want this to become another job, like another job or another, pressure cooker type of environment where you have to sit here the whole day looking at charts, red eyes, tired eyes, frustrated, because the more you're going to get more losses. I've already told you, with experience, the first trade is probably going to be your best trade all the time. Sometimes it may not be the best, but the second one might be even better. But the third one, the odds start going against you. Okay? That's just how the market is. You're going to start being a little careless. You're going to start risking more. And the market is probably not going to give you the massive moves that you see at the beginning. The volatility shrinks. And you can see, guys, even right now, you can see we had a big candle. The only other time we had another fat candle was around this time here. And then look at it now. You can't even tell, they're like just short, small candles, one candle big here, another small one here. So literally, you can't tell what is going on, okay? And you can see this is NASDAQ, which is supposed to be extremely volatile. You can see this is, let's go to gold. Let's look at gold. Well, I can just type gold here. If you don't remember the symbol, just type the name. Is XAU USD. You can see gold is still pumping down. 2 minutes. See, it's pumping down. But now it's going to start coming back because it is really separated from. So we can actually capitalize on this because right now it's going to start pulling back here. Okay. So the only way I can enter a trade, a counter trade, to go out closer to the 20 is if I see a green bar going up. You can see, you can trade these wicks. It's going up now. Followed by another green. Or maybe not. Probably still the move downwards. But I can see they're fairly separated here. You can see the 200 is separated from the 20. Then the bars are separated. And still pumping downwards. Wow. Okay. So it's coming for these people who entered here. Some fellows have their stop losses down here. So it's going to be wiped by this. That's the deal, probably. That's what the market wants to do, is to come down and take their stop losses here. They entered here and boom. Okay, it's 10:34. There we go. Yeah, so you see this is now going up. It's the upside. So we can just take a trade for gold to the upside. And let's buy. I bought. I'm going to put the stop loss right here. Oh no. Very tricky. Tricky entry. Let's put the stop loss because we don't want to give our winnings. Oh my goodness. Our stop loss is this one here, 47.51. Give us a chance to put our stop loss. 47.51. We give up some winnings. You can see that. Okay. See, I told you, when you start trading too many times, you guys are learning, right? We did 2 trades. We should have gotten out. We took a 3rd trade. Look at it. Very risky now. So it's going to put us at a lower. Okay, so I'm just going to wait for this to go, and I'm going to move my stop loss. Yes. We took a counter trade. A counter trade, I leave those for the experts. A counter trade means we are going against the grain. You can see the grain is to go down. Okay, but it's been doing that for so long. My feeling was, my reasoning, which may not be right, was that we have come to the end of this run. We should get a pullback close to the 20. Okay, a pullback to the 20 here. A pullback close to the 20. Okay, you can see it shoot up. Not what I want to see, but it shot up. That would have been a nice opportunity for me to close this trade. It's a highly risky trade. Okay, so right now I'm going to just wait. If it goes above, I'm going to move my stop loss somewhere. Let's see. Okay, so we're in a trade, guys, that is very risky trade. Okay, we took it. Learning moment for you guys. We took it. The reasoning was simple. Separation. However, it doesn't look like that was a separation. Oh, so did it take our stop loss? Okay, it shot up. I'm going to move the stop loss, guys. I am going to move my stop loss really quickly. I am going to move my stop loss to break even. I don't want to give inch of that win today. I have moved my stop loss. I'm not giving it breathing room. I have not given it any breathing room, guys. I have moved my stop loss, and I'm moving my stop loss. As it moves, I move my stop loss. Okay, it moves. I move my stop loss. Now it's going to come back. Okay, and take us out. Okay, but we will have made a gain. I moved my stop loss, guys, to that bar somewhere half between the bars. This bar is going to close in 1 minute. So let's see, is it going to wick us down? See how much it's going to wick us down. Okay. If it hits our stop loss, good. It's okay. Bam. Out. All right. So let's see. So we didn't gain much. We're still at, how much did we gain? 71.99. Whoa. We gained, guys. We gained how much? We gained $4 and some change, guys. $4 from a small account. That's almost 10%, you know, literally. So now here we go. So the maths changes now. So the math changes. So we are now at 71. So that's what I was saying. If you spend a whole day here trading, you're going to be taking some very risky trades. Okay, I've given up on this trade. However, my reasoning was correct that looking at the pattern, looking at the basics of this free flow color change. That's why I say you need some experience. You need to understand the strategy. It looks so simple, but you might miss some basics. Okay. What is the purpose of the 20 moving average? The 20 moving average is literally dictating the market position at the moment. You know, every time I look at the bars, I'm looking at the bars and I'm looking at the 20, their relationship. Their relationship is like this. It's like a brother and a stepbrother, or a sister and a stepsister. Very close. Sometimes it can be rocky relationships, but they're very close. And then they are under the watchful eye of their parent. The parent is their mom or their dad is the 200, okay? So sometimes the children, which is the 20 and the 200, can actually move far away, okay? They go far away from the 200. They go far away. Sometimes the 20 is actually left by the stepbrother or stepsister who moves far away, far away. But however, at the end of the day, they tend to move closer. They're more powerful when they're united, when they're so close to each other. So the separation becomes narrower and narrower. When the separation is narrower, be prepared for an explosive move to either the downside or the upside, depending on the situation. In the case of where the 200 is pointing up, you're going to expect an explosive move to the upside. In the case where the 200 is pointing down, like it did here, you can see what happened. These massive candles going down, okay? Excuse me. So that's exactly what happens. So right now we can see again, we are doing the same thing. We're repeating the same pattern. We came closer to the 20 and then boom, we decide to go far away. And then we are moving farther, even farther away from the 200. So you know what is going to happen now? At some point, we're going to start moving closer to the 200. I mean the 20, and the 20 is going to start moving closer to the 200. Okay? Okay, that was gold right here. See? So now, yeah, we moved closer, and now we are moving far away. Okay? We are moving farther away now. Okay, so we came closer. We didn't really even touch it, but we are now moving away now. Okay, so we took advantage of this slight pullback here. This move is a pullback because the trend is downwards. You can see printing lower highs, lower highs. This is another lower high, lower high, lower high, lower high, lower high, printing lower highs, going down. You can see lower lows, lower low, lower low, all over the place. Lower lows and lower highs. Down. 200 pointing down. Gold price is going down. Okay, no doubt about that. We can all see that. Okay, you don't need a rocket science. We can all see that. You can see there are more red bars than green bars. The red bars are even bigger, stronger, powerful than the green bars, telling you it's a downward trend. So, okay, here, for me to actually take a trade on the downside, if it engulfs this, okay, if this red bar literally closes below this green, you can literally take that trade to the downside. Okay, see, it is actually closing below there. Oh, it didn't. Yeah, it didn't. It ended up closing above, so you can see it's not an explosive move to the downside. Okay. However, you can see it is going down. Now we're getting a wick from the bottom. So we're going to start playing this game right here. You see this game here? Go up, come down, go up. Very close, close, close. So I think we end it here, guys. And I was giving you a breakdown of the FCC. So literally, those are some of the rules. Color changes, you're going to be paying attention to the color change. You're going to be paying attention to the moving averages. So moving averages. In this case, we have the 200 SMA and the 20 SMA. The closer they are to each other, you expect some explosive moves. either to the downside or the upside, based on where the 200 is pointing. Now, if they're flat, it could be either way, okay? If they're all like straight lines, then it could be either way. It could be above or below. But if one is pointing slightly, the 200 is pointing up, you're going to get very explosive moves to the upside. If the 200 is pointing down, you're going to get very explosive moves to the downside, okay? Now, the market, the bears, they tend to move very close to the 20. They tend to hug the 20 a lot, okay, which is the shorter moving average. And so when they are severely separated, if the 200 then separated from the 20 and the 20 separated from the market, what is going to happen? It's just a matter of time that the bars are going to start coming closer to the 20. And sometimes when they get to the 20, we get an explosive move going into the opposite direction. Or sometimes they actually break through the 20. And what are we going to get? We're going to get the 20 moving back closer to the 200. And sometimes once they get to the 200, we're going to get an explosive move in the opposite direction. However, sometimes the 20 will cross the 200 and the market will follow along, okay? So you have to pay attention to things like that. Basically, market structure and color changes, okay? So you enter on a color change, exit on a color change, take your profit on a color change. So like here, you see it's going up, color change. We see a red, we enter, we start seeing a green forming, we get out. So you enter on a color change, exit on a color change. Or when it hits the moving averages. You could use the moving averages as your exit strategy. So like right now, you can see, what do we guys have? Now here, I'm even tempted to sit here and wait for a trade in the reverse section, because now the 20, this is the blue one, the 20 is separated from the 200. The market, the bars are being separated from the 20. The separation is growing greater and greater. What does that mean? At some point, it's going to start moving close to the 200, the 20. So that could be a counter trade, which we can sit here and take, okay? So when we see a green bar forming going up, we can jump in for that ride up towards the 20. So right now it's pushing down. And it is pushing down explosively, because you can see all this is happening below the 200. And the 200 is pointing down, telling us that gold price is going down. No doubt about it. The price is going down. You guys can see the price is going down. Okay, now here we are. Here is the response. Let's see how powerful the response is going to be. It is showing us a wick from the bottom, and now we have a green. Okay, so there is a green bar forming. So if you want us to take the trade, that's gold, we can buy. We bought that. Where is our stop loss? We're going to put our stop loss. Oh, was that gold or NASDAQ? Oh my goodness, that was NASDAQ. Oh man, we just screwed up. But anyway, gold, we can put a stop loss right here. 47.50. It's behaving the same. 47.50. Put a stop loss just in case. 47.50. Hold. And I'm going to move my stop loss to break even so I don't lose nothing. There we go. Give me a chance to do that. Actually, you know what? I'm going to wait and see what happens. Big rejection here on gold. So, guys, that was a rookie mistake, guys. The asset I have here is gold. The chart I was looking at was NASDAQ. So I thought I entered a trade on NASDAQ, but I entered a trade on gold. That's a rookie mistake, guys. You'll be fired, okay? Your broker is going to fire you if you do that, okay? Literally, your investment guy, your manager is going to fire your ass. Excuse my French if you do that. You will be fired, okay? Guys, I moved my stop loss above. Okay, it took out my stop loss because I don't want to be in that trade. I just don't want to be in that trade. Okay, so I took this because it didn't start right anyway, but I have gained, okay, from what we had here, 70, 2, now we're at 74. So we have gained, okay? So we have gained. We are now at 74.91. So that big mistake ended up giving us something, but I got out of the trade because you can see what is happening. It is squarely going down. So now we can wait. If it engulfs this, if it goes past this, we can enter. So you see how fun the free flow color change strategy is? You can be here just tapping little money, dollars out of the market at will, literally at will. Okay? Play the game, play the monopoly. You can literally be tapping money out of the market. Okay? I think this should motivate some of you to learn this skill. And if you want to learn how to trade, you can join our community, the Smart Wolf Club. The link is in the description, in the comments. Go and join the Smart Wolf Club. And if you really want mentorship, you can go to the profitwellnesshub.com, go to the app section where it says mentoring. Go and we'll be mentored. So I think we're going to end it here today. Our goal was 108 from 59, but we ended up at 74, which is a nice jump change. So we have 2 more days this week to trade the Forex. We're going to trade tomorrow live at 9:30. We're going to be taking this 74.91 to 108. We're still targeting the 108 because that's where the magic is going to happen. I want by the end of this week, we should be at 108 so that next week, you guys can see the aggressive recovery strategy. We are going to give ourselves 5 sessions to take that account from 108 to 1600. And we're going to do it with the power of the Almighty and your belief and your trust and your prayers, okay? So I think I'm going to end this here on a higher note. But before I do that, let me show you where you can go and get mentorship, okay? It's an application process because we don't just mentor. Our coaches are extremely busy and we have coaches from all over the world. Tajimoto from Tokyo, Japan, Mr. Baker from Atlanta, Georgia. These guys have been in the Smart Wolf Club for over 20 years doing this same stuff that they're going to teach you, trading stocks, Forex, anything you want that can be traded, they have traded it. Digital marketing, okay? You are into digital marketing. They're going to, so you go to the app section where it says private mentorship, apply for access, okay? So go there and apply. Private mentorship, okay? So you go to profitwellnesshub.com. The link is in the description. The link is in the comment, pinned up on the comment section. And you can use some of these free tools like Time Converter. When we talk about meeting us at 9:30 a.m., depending on where you are. Some of you, like one of our coaches is in Sydney, Australia. Josephine, one of our coaches, she's from Sydney, Australia. If I tell you here, if you go to Sydney, you can see the time in Sydney now is 12:53:18 a.m. Okay, they are 1 day ahead. It's already Thursday. Okay, Thursday morning. We are still Wednesday. Those of you who are in New York, it's still Wednesday here, but it is Thursday in Sydney. So this time converter helps our nomadic brothers and sisters. We have digital nomads. They trade from wherever, anywhere. One day, one morning, they're in London. 2 weeks later, they are in Rio de Janeiro, trading with one of our coaches there. Rodrigo's is one of our coaches, Rio. You can see Rio de Janeiro. Rio is 11, so only 1 hour ahead. So Rio is just 1 hour ahead. GMT plus 3. Sorry, GMT minus 3. So they are just 1 hour ahead of New York time. We have a coach from New York, actually. Many coaches. One of them is Rosemary. She's been in the Smart Wolf Club for 20 years. New York, New York. So for her, it's easy. Now, for some of you we have a coach from Bombay, India, Mr. Singh, over 20 years in the Smart Wolf Club. Again, if you go to Bombay and you don't know what time is 9:30 a.m., you can just type here Bombay. Maybe I don't see Bombay. Maybe Mumbai. Let's see. Is Mumbai here? Yes, Mumbai is here. Bombay didn't show up, but you can always add your favorite candidates. So here is Mumbai, 8:24 p.m. Okay, so it's 10 o'clock, 10:24 here. It's 8:24 p.m. in Mumbai. Those who are in New York, it's New York time. So we're going to meet tomorrow again at 9:30 a.m. Make sure you guys come with your platforms ready so you can take the trades. When I say I'm entering, you're watching, you enter right away. You take the trades, okay? calculate your risk properly. We're going to put our stop losses 1 bar down, okay? This is what I mean here. If let's say I enter this trade, right? You see this trade here? If I enter this trade, my stop loss is going to be right under this bar here, okay? So the only thing I can lose is that length of that bar. Now, if the bar is so big, like this one here, I can split it into 3 portions. So first, I can trail my stop to the third, to the 2/3, or even to the full bar, okay? I don't want to lose that much for a big bar like that, a power bar. I call them power bars. They're powerful, okay? And you can see why they're powerful, because the 200 is facing down, the 20 is facing down. So the red bars are massive, okay? Massive, massive. Okay, so you see it comes back close to the 20 and then it starts going away. So now we're going to get a massive down move there, okay, which has been rejected and it has been countered right away. So sometimes they move closer to the 20, they move away, they move closer, they move away. That's how the market is behaving right now. You can see it's moving away. That's a big bar going down, okay, big bar going down, moving away, okay. See, that's the 2 minute. So you can still be trading this. Like some of you are like, okay, yeah, you see what it just did? Did you guys see what it just did? Shooting all the way down. Gold is going down, and you can see why. These guys are seriously going down. You can see gold is going down, okay? It's going down. This candle is going to close in about, it's 1 minute now. This candle is about 1 minute. It's a big bar. So it's one of those big bars. And then it's going to be followed by probably a counter green bar going up, okay? Sometimes there's a continuation, but it seems like it's going to be countered. It's going to be countered. Yeah. And that's gold. You can see that it's going to be countered most likely. I don't think there'll be a follow through. Looking at the pattern here, a few of them have had follow throughs, like this one here had a follow through, but most of the big bars didn't have any follow through. Instead, a green bar prints right away. So sometimes you have to do what we call pattern recognition, and the market tends to follow patterns, okay? You get a big red bar. It's not followed by, yeah, see, it's followed by a green bar, right? This is going to be probably a green bar, trying to bring it back to the 20. Yeah, because, yes, so it's trying to bring it back to the 20. So we can buy for the of it. Let's see. We just bought. Let's see what happens. Our stop loss is right here. We're going to put a stop loss at 47.36. Quick, quick, quick. 47.36. In there. And as it goes further, I'm going to move the stop loss. Ooh, it's coming back to take our stop loss. Okay, let's see. I'm seeing a massive wick at the bottom. Okay, so it's gone. If it goes further, I'm going to bring it to break even. No. No. The big bar wants to go down. Is there enough mojo? Is there enough strength to push it up? No, it has a big wick at the top. So our stop loss is right here, guys. This is where our stop loss is. Very close, right? Too close for safety, right there. That's where our stop loss is, right there. So I want to move the stop loss to break even. We entered around here, but I don't want to move it now. Let's see if it's going to jump up. If it jumps up, we're going to move our stop loss to break even. Oh, it took our stop loss. Okay. It took our stop loss. So now it pushed us back to we lost a bit here. So we're down to 66. So now that's what happens. The more trades you start taking, you guys can see practically. If you left the market earlier, we could be good. Okay. If we left the market earlier, we could be good. But instead, we didn't. So we're here now. Our stop loss is right here. Let's put our stop loss 47.36. $47.36 is our stop loss. So we're giving back our winnings just to show you guys that, as I said, do the 3 trades, get out of the market. The more trades you take after that, they're just risky trades, okay? They're just what we call risky trades. Because now we are praying that this bar tries to recover from this to go way above and engulf this, which is not likely looking at the way the market is behaving. Because the 200, you can look at, if you look at the chart for gold, this is gold. Okay, see it's moving, right? It's pumping. It's going to pump maybe not that much because already you can see there's a rejection there. So our stop loss is down here, but you know we didn't enter until much later. Okay, so let's move our stop loss, guys. Let's move our stop loss to break even. Or at least there, minimize the loss. It's a big bar. We are not breaking even yet. We just moved our stop loss to halfway through that big bar. Okay, it's 11:02, guys. We should have stopped trading, but this is a trading account, so I'm just showing you the good, the ugly, and the bad. The bad behavior was taking too many trades after we had said this is done. So we lost one, and we took another one right away, just to show you guys that the things that I've been talking about, you gotta follow your plan. 3 trades out of the market max. Okay. Because if you push it further, the market has a way of getting back what it gave you. It's like you greedy son of a dash. See what the market is doing now? It pumps up and then it falls down just to come and collect your stop losses. Okay, there you go. So now it's going to collect that. Yeah, so now I think it's just going to, yep, boom, boom. We can't survive that one. We can't survive. There's 2 minutes left, and it seems the sellers are not giving this gold a chance. Gold price is bound to go down today, and you can see the reason. Look at the moving averages. They're squarely. You can see the 20 has just gone that way, signifying further control, further obliteration of the price. Boom, it is done. Okay, so it is done, guys. It is done. Okay, so we gave up a lot of winnings. We gave up $10 back. All right, so guys, it's 11 o'clock. We shouldn't be taking any trades after this. I'm showing you the bad, the ugly, and that's exactly what's happening here. If you got 5 minutes chart, this is what's happening. It's a 5-minute chart. The gold is dipping. Gold is dipping up like that. we buy gold. Stop loss is going to be down here. Gold price is falling down big time. Okay, you can see it's falling. So it prints one green bar, excuse me, and then it prints a red bar. Stop loss is 47.36, so you need that stop loss 47.36 to protect your account. And we are very close to where we started. We gave up our winnings, guys. So what have we learned? Follow your rules. 3 trades, get out. You stay there longer, you're going to give up the winnings, okay? Because you're going to be taking more what we call risky trades. I like to give these lessons to my students, okay? You take the trades, 1, 2, 3, get out of the market. The best trades are your maybe the first one, second one, third, not that much, but the first and second. Those are your best trades. So you're going to take those and run, okay? So now the only thing I'm doing here is to wait to bring my stop loss to break even, okay? I want to bring my stop loss to break even if the candle pushes up. But looking at the way it is here, this guy is dangling down. The 20 is now trying to bend downwards. The market is being forced to go down. However, looking at the pattern, we have had a pattern like that. This thing prints a big bar, then we have 1 or 2 green bars going up. Okay, that's not giving up easily. It's not giving up easily without a fight. So it may just print one green bar and then the reds come again. And we have a continuation to the downside. So the price of gold is tanking. Because it could be something like this. You see where it is? These patterns repeat themselves. You see, like here. You see, like this one here. So we have how many minutes? This has 2 minutes to go. This bar has 2 minutes. It's a 5-minute bar. So we have synced our, this is a 5-minute bar. So we have 2 minutes to go here. Okay, it's printing a red. So this was just a breather like we have here. And then we start printing reds to the downside. We are doing a counter trade because, you know, the 20 is going down. The 200 is facing down. So this is a counter trade. Okay, this bar is about to close in 1 minute. It's a very small red bar. It's going to close in a few seconds. Let's see how much time is left. 12 seconds. 12 seconds. Now it's 6 seconds. Oh, it shoot down. It shot all the way down. Oh, so that's going to take our stop losses now. Okay. Okay. Okay, so it's going to take our stop losses, shooting down. That was the idea. It's going to take our stop loss. So there we go. 47.42 is our stop loss. 47.42, that's our stop loss. And it's going down. 47.42. So gold has decided it is going to be pushed down. So it came down, took the stop losses because there's people who had entered here. So it's just sweeping that liquidity and then moving on. So now I think our account should be even less than where we started today, okay? Because of over trading, okay? So lesson learned here, over trading. Don't over trade, okay? Put that down. Do not over trade. Only take number of trades as per the plan. And our plan is 3 trades max out of the market. Now, if they are all W's, 2 trades. If you get 2 wins, you can leave the market. Or 1 more risky trade, which is the 3rd trade. 1 more risky trade, which is your 3rd trade. That's how it works. Okay? Now, so this is a very important lesson to especially those of you who are new here. I know most of our seasoned traders know this. They left the market. They didn't do this. But I'm here giving you lessons, guys. I gave you the lessons. Okay, so you can see what happened here. It came back and it took our margin. So now we are back to where we were yesterday. Yesterday we were 29, then we went to 59, then today we're at 71. Now we've moved back to 29. So we're going to be starting at 29. Why? Because we overtraded. Okay. So margin called down to this level. Okay. Very, very, very volatile. Volatility is what has killed us. The volatility of gold has killed us here. You can see the indecision in the market. The price of gold is going down. So we're going to call it a day now, and I'll see you guys on tomorrow morning as we continue to learn and build this account to 108. Okay? So I'll see you tomorrow. Somebody says, oh, take another trade. Oh, no. You guys are seeing the fun. It's 11:13 now. So I want to respect your time. Okay, somebody's saying, take another trade. Okay, let's take that one. Okay, it's a training account. So what is our stop loss? Our stop loss is going to be right there. 47.42. Okay, so you guys see where we get our stop losses? 47.42. That's our stop loss. Just below this candle here, that bar. The previous bar. Okay, it's coming down for our stop loss. Okay. You can see a lot of this is going down because look at that. Boom, 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 boom. It's all going down. The candle has this wick, and now the market is going up and down, up and down. So there's going to be a lunchtime bump or dump. That's what most of the traders would be looking for. There will be a lunchtime bump or dump. You can see A lot of indecision there. Okay. It's bound to go down because this is shooting down. The 200 is now facing down. So this is likely to be facing down. So the more trades you're taking, the riskier they get. Okay, no doubt about that. You guys have seen it live, and that's the lesson that I wanted to give you guys. You've seen that lesson, you've learned, you've seen it. The more riskier trades become, the more trades you're taking, the more riskier they get. Okay. Now, somebody's asking, you think gold is going to recover here? Not likely, because the 200 is actually facing down now. It's bent. This is a 5-minute chart. If we look at the higher time frames, let's see, that gives you an idea. The 200 is facing, the 20 is coming down, and I told you the market likes to hug the 20, so it may come down with the 20 towards the 200. The 200 is also now starting to point downwards. Okay. Okay. So if I remove that line, so no confusion, you can see this is a 15-minute, so it's a higher time frame. If you go to the 1 hour, again, if you look at the moving averages, you can see the 200 is facing up. Okay. It's trying to become a green bar. However, the 20 is way above here. So the likelihood is going down. Okay. Or it's coming close to hug the 20 and then move down. Okay. So there's a possibility that it's coming even closer to the 20. I told you the bars tend to move close to the 20. The 20 goes away wider from the 200 and then it comes back to the 200. Like you can see here, pretty narrow. And when they're close to each other, you get these explosive movements. Okay. So that's exactly what happens. You get these explosive movements. So you can see right now there isn't much momentum here. You can actually see these candles are just right here oscillating. Okay. Nothing much really. So it's like we are in this limbo here. Consolidation, aggregation, try to get some pressure, build up some pressure, and then boom, probably to the upside or to the downside. Now, upside would be a bit of recovery for the market. Okay. So for me now, all I'm going to do is move this stop loss closer so that we don't obliterate the account completely, because we can actually obliterate this account completely if we don't pay attention to what's going on here. Okay, I'm going to move it to break even. There we go. Okay, so now it's at break even. So if it comes crashing down, we still have something to look forward to start trading on next week. I mean tomorrow, because we have to start trading tomorrow. Okay. So we gave up the winnings by the 2 trades that we took, and I can explain to you that was a good lesson for you guys, that if your plan is 3 trades out, that is your plan. Our plan is always 3 trades max out. Okay. Anytime we start dwelling too much on this, we end up losing. Okay. You end up giving back your winnings. So you can see we have moved our stop loss up here so that we can secure some wins. We can secure a win here. Let's see if that goes up, I can again move the stop loss to the close of this or the opening of the new candle. So guys, we're going to be here until 11:30. Just for those of you who are here, if you wanted to leave, you can leave. We leave at 11. However, we are trying to show you that with the FCC strategy, you can trade all day long, but we don't want you to do that, because what's going to happen, you can see what happens. The quality of the trades diminishes as you go down to, okay, so we're going to try to secure that. We're going to make it really tight. Okay, so we've moved our stop loss all the way up there. So if the candle, if it goes down a little bit, it's going to weak us out, which is what we're looking for, so we can get out of the market. We want to get out by 11:30. So I'm not anticipating this to go any further. Looking at the way gold has behaved today, the price of gold has gone down. So let's see what candle we have here. Let's go to, that's the 5-minute time frame. Okay, there's a 5-minute time frame. So it's this one here. So as I told you, it comes back to the 20. Okay, so it's trying to get as close to the 20 as possible, but the momentum is diminishing. Okay, it is really trying to get to the 20. So once it can get close, like here, you see that it even hugs. It even attempted to go past the 20 here, but it was pushed down. And the reason is, you can see that 200 is pointing down, signifying that the price of gold is going to fall. This candle has about 4 minutes to go, 3 minutes to go. So let's see what's going to happen in the next 3 minutes. That's going to push us to 11:25, and we're going to stop this at 11:30. Okay, so I've given you guys, okay, so you see exactly. So I think it has wicked us out. Yes, so we are out, and you can see this is where we are now. We gave up all our winnings today from 71 down to 36.42. So this is where we're going to be starting tomorrow, and our goal is to get this to 108. All right, so go get some good sleep. Be ready to fight the market. Okay, and the market taketh what it giveth if you stay too long. You can write that down. The market taketh what it giveth if you stay too long in the market. The market taketh what it giveth if you stay too long in the market. I repeat, the market taketh what it giveth if you stay too long in the market. Thou shalt not stay too long in the market. Follow your plan. Wins 2 or 1 more risky trade, 3 trades max out of the market. I will see you guys tomorrow. Let's say a word of prayer. In the belief of the power mighty, we pray whoever is going to follow this training may be successful. May we all follow our trading plans, and may we not over trade. Do not over trade. This is big no. This one right there. We have learned that here, and you guys, I have shown you practically. Do not over trade. Do not over trade. That's probably the best lesson you guys are going to take from this training today. And I want you to go and share this message with all your wannabe traders or all your friends who are traders and they are not making any money. Do not overtrade. Set your goals. 3 trades, get out. Max 3 trades if you're following this free flow color change. The market is going to give you the wins, but it's going to take them back. The market taketh what it giveth if you overtrade, if you stay too long in the market. The market taketh what it giveth if you stay too long in the market, meaning equivalent to over trading, what most people don't want to hear. Over trading. That over trade. Practical example. I just showed you practical example. This is a training account, so we show practical. We don't want to just talk the talk. We want to show you the bad the good and the ugly. Okay, so I just showed you exactly what happens. You go all the way to 71, you come back to almost zero, and if you're not careful, you're going to blow the account. We are so close to blowing the account. Okay, so now you see exactly what I was telling you. It's going to come close to the 20, and then it's going to go down again. So if I'm planning to stay here all day trading, that's what I'm going to do. I'm going to wait, see a candle going down. I'm going to bounce, take the short trade downwards as soon as it starts going down. But we are not going to take any more trades now. We are closing it at 11:30. At 11:30, we're going to close this. Okay, you can see it's trying to go down, right? Now, that could be a fake out too, okay? But you can see it's actually trying to go down now. So it has come back close to the 20. And now it's trying to go down, okay? It's trying to go down now, okay? It's trying to go down. So I think this is a sweet spot for us to get started tomorrow at this $36.42, okay? So we gave up our winnings from yesterday and our winnings from today by over trading. So you see the danger of over trading, guys. I cannot overemphasize this. So tomorrow we have an uphill task to recover what we lost today and also grow the account, okay? That is the uphill task we have created for ourselves, okay? That is the uphill task we have created for ourselves. You can see what this is trying to do. It's trying to go further. It's trying to go further to the 20. But it's very hard, very, very hard to go to the 20. It is finding it very difficult. If you go down to 2 minutes, you're going to see exactly what's going on. So at the 2 minutes, it has actually crossed the 20, okay? Even though it's below, so it's going to be crashing down. The 20 is trying to go back to the 200. See, they're widely separated. So the 20 is trying to go back. Now with it, it brings the market. The 20 is trying to go back to 200, get closer like here. Okay. All right. So I think it's 2 minutes to go. We're going to end it at 11:30. So what have we learned, guys? We have learned, let me bring up this. Very important rules. The free flow, color change, FFCC strategy, moving averages. This is what the tools that you require is just moving averages. Tools required is just the moving averages, 2 moving averages. You just need your trading platform and 2 moving averages. Do not overtrade. Only take number trades as per the plan. Okay, and our plan is 3 trades max out of the market. Wins. If you win 2, you can get out of the market. You can take a 3rd trade after 2 wins and you're likely to give back some money. Okay. Or you could be lucky to consolidate your wins for the day, like we did earlier. However, when we started trading, that is a different session altogether. We stayed after 11, we started trading. What happens? You give back. So over trading is not good. Okay, do not overtrade. The market taketh what it giveth if you stay too long in the market, which is equivalent to what we are calling overtrading. Okay. Now, it's very easy to be tempted to overtrade with a strategy like this because it's so simple and the opportunities come every 8 minutes. Almost every 8 minutes, if you're trading on the 2-minute bar, you have an opportunity to take a trade. It's like every 8 minutes, you have an opportunity to take a trade. Looking at NASDAQ, again, you can see a lot of consolidation, nothing to write home about. But in this case, you think the 20 is facing down. I mean, the 200, the 20 is far away, so it's likely to be trying to get back to the 200. Okay, so we might see some moves going up, counter trade. That's why you see this is trying to go up on the NASDAQ. Okay. It's 11:30, ladies and gentlemen. It's official. We're going to end the live, and I'll see you tomorrow. So there I am. I am back. This is me right here. We're going to end it on a powerful note. Yes. Powerful note. And this is what we're going to do. We're going to say a word of prayer. In the belief of Almighty, we pray that whoever is going to be following these trainings and they take them seriously, that they may be successful. We pray that the markets stay good to us and that as we meet tomorrow, we're going to make big wins. We pray and believe in the name of the Almighty. Amen. Guys, I will see you guys. Stay positive. If you want mentorship, it's not for everybody because it costs money. It's not free. Our coaches, their time is extremely valuable. You can go to the profitwellnesshub.com and under apps, we have a private mentorship access. You can go there, you can apply. Okay, you have one-on-one sessions, and every month you have some credits remaining. So you can book the session where you get on a live call, live trades, live call, anything live that you want to do, whether you're into digital marketing, trading, or making money online in general. Our coaches have been doing this for many, many years. Some of them 40 years, 30 years. Some of us have been online since 1998, okay? Not everybody qualifies. We only take a few people who are very serious. And this is the account we are working on. It's a small account. We started at $8, so now it's at $36.42. This is the 4th trading session, guys, okay? So still very positive growth, even though you did see a very good example of overtrading that ends up handing you a lemon. You're going to get a drop down, massive loss, okay? So we gave back big winning, about 30, almost 50%, okay, back to the market. And the reason is very simple. I didn't say this. The market taketh what it giveth if you stay too long in the market, which is what we call overtrading, okay? So if you take too many trades, you are likely to overtrade, you're likely to have stayed too long in the market, and you're likely to give back what the market has given you in the beginning. Your best trades are either the first 2-3 trades, so get out after that. Now, if you come to the market, the first trade you take, you lose. Boom, you lose. Take the second one, lose. Leave the market for the day, okay? Go to the beach, go do what you like, go volunteer, whatever you like to do, go to your 9 to 5 with your head high. Come back tomorrow. So you leave to trade the next day, okay? Don't stay there. Don't keep trading, okay? Don't keep trading. 3 trades max, get out. Go to the beach, have fun, and you're going to realize that you're always positive. We're still positive on this account. The fact that we started from $8, but our pace was to get to 108. That was our plan today. However, we gave back our winnings because of overtrading. This was a beautiful lesson that I wanted you guys, my student, to appreciate live. This is a practice account. So it's a live account, not a demo account. We're not doing this on a demo account because the emotions are different. It's totally different when you're trading on a demo account. You can't just connect your brain and the emotions and demo accounts and the real. Real account means you're losing money, real money, hard-earned sweat. Okay, you're losing money. So the emotions are different. The anxiety is different. The feeling in your stomach, the butterflies are stronger in your stomach. They're going to be big butterflies in your stomach. So we want you to have that experience while you are learning how to trade. Okay? So we're going to have dummy accounts. This is not a dummy account. It's a real account. Little money in here, but we're going to take it to the ringer. We're gonna stretch it. We're gonna do the good, the bad, and the ugly, so you guys can learn. With that, guys, I'm gonna get out of here, and I will see you next time. Okay. Goodbye.